In this video, let's talk about a dividend stock to buy and hold forever. This stock is a REIT or a real estate investment trust, and it has been giving an annual compounded return of 15.2% since 1994. It has given a total of 611 monthly dividends. So that's over 50 years, and they have never missed a monthly dividend payment. Yes, it's monthly dividends. And they've been increasing their dividend payments by an average of 4.4% every year. So it's the perfect stock for your retirement. But before we get into the stock, if it's your first time here, let me welcome you. My name is Ronald, and welcome to the Dealmaker Channel, where we talk about investing in multiple asset classes such as stocks and real estate. If you like getting content related to investing in the stock market or the real estate market, then please support the channel by hitting the like button and subscribing to the channel. So let's get on to the stock. So the dividend stock to buy and hold forever that I'll be sharing in this video is Realty Income, ticker symbol O. And what's interesting is they call themselves the monthly dividend company. So they don't highlight themselves as a real estate company. They don't highlight the fact that they are a real estate investment trust, right? They highlight the fact that they've been giving monthly dividends for more than 50 years, and they have not missed a payment. So this is really part of their DNA. But in addition to that, I'll be giving you 9 reasons, okay? 9 reasons why you should consider buying Realty Income. So of course, no stock is perfect. So I'd like you to watch all the way to the end so that I will also share with you 3 reasons why Realty Income may not be the right stock for you. So looking at their investor presentation, so we can see right here that Realty Income has had a compound annual total return of 15.2% since their listing in the New York Stock Exchange in 1994. So they have a proven track record of return. So that's reason number 1 to buy Realty Income. Reason number 2 is they've been able to deliver these returns with low volatility. So they are a picture of stability. If you need stability in your portfolio, then this may be the right stock for you. So you can see here that the beta versus the S&P 500 is 0.4. So the beta is a score that measures volatility. If it's more than 1, then it is a volatile stock compared to the S&P 500. At 0.4, this means this has lesser volatility. It doesn't go up and down as wildly as the S&P 500. So if you're the type that likes to have a little stability in your portfolio, or if you need a little stability in your portfolio, then Realty Income is the right stock for you. Reason number 3 is that for me, I really love the fact that they are a monthly dividend company. They pay out dividends every month, and they've been consistently increasing dividends by 4.4% since 1994. They're actually part of an elite group of companies called Dividend Aristocrats. So these are companies that have been giving their dividends faithfully. They have never missed a payment for the past 25 years, and they've been increasing their dividend payments annually. So there are only 65 companies inside that Dividend Aristocrat Index, and Realty Income is one of them. And they're able to deliver that consistency in annual return and in dividend growth because they've been consistently earning every year as well. So they've had 24 of 25 years. So they've had 24 years of positive earnings per share growth, and they've been increasing their adjusted funds from operations per share, or AFFO, by 5.1%. So for those of you that are not familiar with AFFO, It stands for adjusted funds from operations. So it's like their net cash flow from running their business. And this is the measure that we like to look at because for REITs, remember that for REITs, they are required to distribute 90% of their distributable income. So AFFO is that income. So we like to see positive growth in their adjusted funds from operations. In their position for growth, we'll talk about this growth later. So where does Realty Income get their revenue? Well, they have a large and diversified property portfolios. That is reason number 5 to buy Realty Income. So they have 6,662 commercial real estate properties spread in the US, Puerto Rico, and the UK. So they're just growing their international presence. Majority of those properties, those 6,600 properties, are located in the US, but they have already started to grow their international presence. Their real estate portfolio is diversified across 600 clients in 56 industries across the 50 US states plus Puerto Rico and the United Kingdom. And 96% of total rent is resilient to economic downturns. We're going to see that later. We're going to see how Realty Income performed during the pandemic. But before we leave the slide, I'd just like you to point your attention here. Moody's and S&P give Realty Income a credit rating of A3 or A minus. So they are investment grade. To put that in perspective, the Philippines, which is an entire country, is only rated BBB by S&P. So Realty Income has a higher credit rating than the Philippines. They've been able to perform well during the pandemic because they have a solid set of high quality clients. So you can just see the names of their top 20 clients. Walgreens, 7-Eleven, Dollar General, FedEx. So these are the stores that were allowed to operate during the pandemic. And as you can see here, in terms of industry diversification, their highest is in convenience stores, 12%, grocery stores, 10%. So these are non-discretionary industries. They have operated at a low price point, so they have to be open even during a crisis. So that insulates Realty Income from economic downturns. So the only industries that were affected were health and fitness and theaters, which comprise 6.4% and 5.6% of their portfolio. So even in terms of restaurants, these restaurants are actually quick service restaurants which were allowed to operate on a takeout basis, takeout and delivery basis. Realty Income's portfolio actually consists of standalone tenants. So their tenants are not located in malls. So as you can see, like in this particular picture, these are standalone tenants. This is a gas station. The main tenant is 7-Eleven. So even though some of their clients in the health and fitness and in their theaters, such as AMC, were closed during the pandemic, they were actually able to collect 94% of their rents. So for theaters and for the health and fitness sector, they gave deferred rental agreements. So they deferred rental collections for these industries. And as the US recovers, as vaccination proceeds in the United States, as more and more businesses start to open, that's better news for Realty Income, and they'll be able to start collecting on those deferred rents already. So you can see here that 63% of their property type is in retail, 11% is in industrial, very small in the office and agricultural industries. They're also diversified across states, with Texas getting 10.4% share, California 8.8%, and the UK at 7.2%. So there is a lot to like when it comes to Realty Income's business. And I hope that you also like the information so far. If you do, please make sure to smash the like button for the YouTube algorithm. That really helps the channel grow and it helps me make more videos like this. So if you want to continue getting information like this, please, 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 please make sure to hit that like button. Don't forget, do it now. Let's go to reason number 7. They have a fortress balance sheet because they have such a strong balance sheet. They have a very, very good credit profile. Like we mentioned earlier, they get favorable credit ratings from Moody's, which is A3 stable, and S&P Global, which is A minus stable. And you can see here that they have a staggered debt maturity. So there's no single year where they have a huge debt that they have to pay. So it's staggered over the years. And as you can see here, majority of their debt is in unsecured notes. So that dark blue bar is unsecured notes. So that means the properties that they own are not under collateral for these debt. So they don't need to put up collateral to get favorable credit. So you can see here 97% of their long-term debt is unsecured and 92% is fixed rate. So they are insulated against future hikes in the interest rate. So that's one of the things that has been a big concern in the market. What happens if the interest rates go up? Well, 92% of their loans are fixed rate, so they don't need to worry about interest rate hikes in the future. Reason number 8 is Realty Income continues to grow. So even though they already have more than 6,000 commercial properties, they have a clear path to growth. So they don't just acquire properties, they can actually acquire other REITs. So like in this case, they combined with REIT, which is another net lease REIT. They have some common tenants, as we will see later, but REIT also has exposure in the office space segment, which they will actually spin off later once the merger is completed. So this combination will immediately add 10% to the AFFO of Realty Income. So it will scale the growth of the company. And in this particular merger, you can actually see the benefit of Realty Income's strong credit profile. So when Realty Income acquires REIT, they will acquire the debt, but they will be able to refinance the debt at a lower cost, therefore increasing the AFFO for the combined entity. So that will now make them the unquestioned leader in the net lease industry. So for those of you that are not familiar with what net lease means, so by net lease, that means Realty Income will not be responsible for the taxes, for the operation, for the maintenance of the property. So in general, it's the tenant that will actually handle all of the headache, all of the operations, because what they do is they have a portion of land and they usually only have a single tenant in that land. So just like what you saw earlier, right? They have 7-Eleven as a tenant, operating a convenience store and a gas station. So Realty Income is not involved in the maintenance of that property. It's actually the tenant that spends for that property, and that includes even the taxes. So if there is a change in the taxes that are about to be paid, then it's going to be the tenant's responsibility for that as well, shielding Realty Income from any changes in the tax regime. So you can see here the before and after of the portfolio. They have common tenants in their portfolio. So after the merger, Walgreens still remains as their top tenant, but 7-Eleven goes down to number 5 and Dollar General Stores goes up to number 2. You have Dollar Tree and Family Dollar at number 3. FedEx remains at number 4. Now, if we go down here, you can see here AMC, which is a theater chain, is a very popular meme stock. So they operate theaters. They will fall out of the top 10 after the merger, so further strengthening the client portfolio of Realty Income. And the growth potential for Realty Income is still big. So as we go back to this slide, so you saw the slide earlier, you can see here that there is a 12 trillion estimated total addressable market in the US and Europe. So this is just the US and Europe alone. And in fact, in last year in 2020, they had acquisition opportunities of $64 billion. They did not buy, of course, all of those 64 billion, so they have a very stringent underwriting process, for acquiring properties or acquiring companies. But there is a very, very long growth runway, growth opportunity for Realty Income. So this is a mature company that will continue to grow in the future. So those are the things to like about Realty Income and why you should buy and hold the stock forever. So let's quickly review before we go into the 3 reasons why you may not want to buy Realty Income. So going back again, the 9 reasons. Reason number 1, they've been consistently growing by 15.2% since 1994, since their listing in the New York Stock Exchange. And they've done that with number 2, low volatility. So this is a very stable stock. So you won't see huge ups and downs in the stock. So it's a good foundational stock for any portfolio. And 3, I really like that they are a monthly dividend payer, and they've been growing their dividend by an average of 4.4% again since 1994. They are a member of the Dividend Aristocrats, an exclusive group of companies that have been giving dividends for 25 years straight without missing a payment, and they've been increasing their dividends every year. Reason number 4 is the reason that they've been able to continually grow. They have continually increased their revenue, their rental revenue, and their adjusted funds from operations. Reason number 5 is they have a large and diversified property portfolio. So they have more than 6,600 properties across the US, Puerto Rico, and the United Kingdom. And reason number 6 is they have a diversified client portfolio as well. And their client portfolio is high quality that actually enabled them to survive the pandemic. So they have a crisis resilient client portfolio. Reason number 7 is they also have a strong balance sheet and solid credit profiles. Reason number 8 is they have a solid growth pipeline. So recently they just acquired REIT. Number 9 is they have a huge addressable market all over the world, and they're just concentrating in the US and Europe right now. So they estimate to have a $12 trillion market. Currently, they are at 32 billion enterprise value. Right, their market cap is at only 26 billion. So they have a very, very long runway of growth with a huge 12 trillion addressable market. So there are a lot of things to like about Realty Income. Disclosure, I already own the stock. Again, I am not a financial advisor, so I'm just sharing with you, my thoughts on the US stock market and the stocks that I own and buy. And I'm sharing this with you so that for those of you, especially that are not familiar with the US market, so I'm sharing a couple of the stocks that I buy and the stocks that I like. Okay, so that you may also have ideas on what you may want to buy. So I'm just a guy on YouTube, sharing my experiences, sharing my research, doing this work for you guys for free. And if you like that, please make sure to hit the like button for the YouTube algorithm. And before you go, the 3 reasons why Realty Income may not be right for you. Reason number 1 is you may experience share price dilution, because one of the ways that Realty Income also raises capital is by offering new shares to the market. So it's like they're doing an IPO over again. So they have a new set of shares that people can buy. So whenever a company introduces new shares into the market, that actually brings the shares down. And some people don't like that. So some people, they prefer that companies buy back shares so that they limit the number of shares in the market. But as a REIT, this is how REITs expand. So they get debt from the capital markets, or they get equity by offering new shares. That's how they grow. That's how they get more money to buy more properties. Because remember, they distribute 90% of their income. Reason number two, it's not a volatile stock. So if you are a short-term trader, then there's usually no opportunity to go in and out of the stock. This is a stock that you really buy and hold for the long term. So you buy Realty Income for the dividend and for the long-term dividend growth. And reason number three, maybe the yield is not that high for you. So like in one of my videos, I shared a agency which actually gives a higher dividend yield at 7% or 8%. And there are stocks out there that give higher dividend yield. So 4% is actually quite good for already for me, because no, where can you get 4% that is also safe and that is guaranteed to grow? Well, almost guaranteed to grow over time. It's very rare to find a stock like this. It has its advantages, it has its disadvantages, but overall, for me, I really believe that Realty Income is the dividend stock to buy and hold forever. So, how about you? I'd like to know your thoughts. What do you think about Realty Income? Let me know in the comment section below. Will you buy Realty Income? And let me know what reason. Why are you buying Realty Income? Are you buying it for its consistent growth? Are you buying it because it is a monthly dividend payer, or are you buying it because it's such a huge REIT and it has a diversified client portfolio and making sure that it is a stable source of growth and income in the future? So let me know your reason for buying Realty Income, or also let me know your reason why you don't want to buy Realty Income, why this is not the stock for you. So please let me know in the comment section below. Make sure to hit the like button. That's for the YouTube algorithm. So check out my latest stock analysis video over here, or check out my free course on stock market investing in the US. So I hope that you learned a lot in this video. And always remember, it's always a great day to make deals, and may all of your deals push through. See you in the next video.